Welcome everyone to Martiak Market Update with your host Mark Martiak. Mark is a Managing Director of Investments with AGP, Alliance Global Partners, member of FINRA and SIPC. This show will explore topics ranging from market updates to the global economy and personal finance. Money is knowledge, and Mark wants to help you navigate your relationship with money by offering timely guidance and his unique perspective. Here's Mark Martiak.
I'm Mark Martiak, and this is Martiak Market Update. Thank you for joining me as we discuss key trends shaping our industries and markets. Today, I would like to share some advice for millennials who are investing in the stock market and how they can navigate market volatility. If you don't know who a millennial is, it's typically anyone born between 1981 and 1997. This generation is the nation's largest living generation, and they're approaching their prime working and spending years, so their impact on the economy is real. This is the first generation to be considered digital natives, growing up with a wide access to the internet, video games, computers, mobile devices, and, of course, social media. They have also grown into adulthood amid the backdrop of lower employment levels due to the Great Recession and, more recently, the pandemic. They are dealing with significant student loan debt, stagnant wages, and rising cost of living. This generation also has a reputation for being values-driven in how they approach their career and how they spend and invest their money. According to CB Insights, from a piece they did on June 30th of this year, the personal finance industry is one of the industries which stands to benefit from millennials. Millennials make up most users of web and mobile personal finance apps, which are year by year becoming increasingly popular tools to help users better understand, organize, and improve their finances. After the initial dip due to the pandemic, we've seen stocks soar, and the markets reach all-time highs over the past year. Millennial investors typically take a riskier approach to investing in the market, looking at stocks that can provide quick returns, companies that align with their values or interests, rather than a traditional diversified portfolio of S&P 500 stocks. Millennials are also more likely to take investment advice from peers and social media platforms like the Reddit users making a run on GameStop earlier this year. Because of the market surge, we're seeing more millennials come into sudden wealth. When Sahil Vakil, founder of personal finance tech company Myra, spoke with the Wall Street Journal in May, he indicated that more than half of his clients between the ages of 25 and 45 have come into wealth over the past year as a result of one of the following events. They were given company shares as compensation, and those same shares boomed. They caught last year's retail investing frenzy, and they rode the market to new highs, or they invested early on in cryptocurrency to great success. Because millennials have gone through painful experiences like unemployment, student loan debt, and stagnant wages, they can feel uncertain on what to do with this newfound wealth, and they also want to continue to grow their investments. I have a few tools and recommendations on how to help you manage this. Make a plan. Take the time to outline your immediate needs and long-term goals. Immediate needs can include identifying and prioritizing what debts you can pay off, like your mortgage if you have one, car, or student loans. List out your long-term goals, such as retirement goals. Perhaps you can retire earlier, setting aside money for your children's college, taking a vacation without stressing about where the money will come from. Starting a new business, whatever your goals are, identify them. Set aside money for taxes, if you can. Move some money for taxes at the time of a sale into a separate account, so you're not tempted to spend the money. Keep copies of all your records. Brokerages are required to provide records on trades to the IRS annually, but crypto exchanges are not. So it's important to keep careful records of all of your transactions for tax time. I would recommend seeking advice from a registered advisor who can help advise the best strategies for your particular personal wealth situation. There are things, depending on your situation, that could be done to help reduce your tax liabilities. One approach might be to sell losing stocks to help offset taxable profits, or making a charitable donation with your company's stock to avoid capital gains tax. Don't make any large or unnecessary decisions immediately. Sudden wealth can be a very emotional experience. Deal with the emotions you may feel, happiness, guilt, or stress, and wait until your feelings have settled to make any large decisions, like purchasing a vacation property or starting a new business venture. I can't stress enough getting good advice from the right people. When dealing with new wealth, it can feel overwhelming. Getting recommendations from family, coworkers, or online can be confusing. Having a professional advisor provide advice on your particular situation can help you see things clearly and hopefully ease the stress of your new status. Look for ways to continue to grow your portfolio, but with more of a long-term lens. Some ways you can look to do this are, if you've made your wealth in company stock, and that's the majority of your portfolio, look to diversify by perhaps selling some of that stock and picking up stocks in other industries so that you are less at risk should something happen to impact that one particular stock you own. Just as markets have risen, they can fall just as quickly. You don't want to be caught having to sell at the wrong time for a loss. Try to invest in something with a term of at least 5 years. Have a long-term view. Try not to review your portfolio too often. In times of market volatility, this can be incredibly stressful. If you just really enjoy the thrill of regular trading and high-risk investments, carve out a small portion of your portfolio to do this and keep much of your portfolio in longer-term swan investments. You're asking yourself, what does Mark mean when he says swan investments? Think of sleeping well at night, swan investments. Thank you for joining me today. It's been a lot of fun, and I'll see you the next time when we discuss Robinhood, the investment trading app, and how millennials are using technology to manage their investments.
Thank you for listening to Martiak Market Update. Mark Martiak is the executive producer. Christina Brown is producer, and Jennifer Gray is consulting producer and content editor. We also want to thank Libby Grant. If you enjoyed this episode, subscribe and leave us a review on Apple, Spotify, or wherever you listen to your podcasts. Stay tuned for Mark's next episode coming soon.